Hello and welcome to Sectors Up Close. I'm Emma McCarthy. Our focus today is on Chinese technology stocks, and our guest is Mike Hansen, the Senior Vice President of Research at Fisher Investments. On the surface, it appears that the government of China cares little for stock market investors. The latest salvo was against the gaming industry. New rules severely restricting the amount of time minors can spend on online games hit shares in the sector hard. It followed a crackdown on major firms including Alibaba's Ant Financial, ride-hailing app Didi and the education sector, along with new rules designed to restrict Chinese technology firms from listing in the United States. All of this has resulted in considerable losses for investors in Chinese technology stocks. Here is just one widely held fund that includes the likes of Baidu and Tencent. It's lost 14% this quarter alone and has propelled the entire Chinese market into bear territory. This has also made these shares relatively cheap, prompting some to argue now is the time to buy. Well, earlier I spoke to Mike Hansen of Fisher Investments. I started by asking him if he agrees with George Soros, who recently wrote in the Wall Street Journal that China is no longer investable.
Well, I think with very much respect due to Mr. Soros, what seems unique about China today is actually a repeat of things we've seen quite a lot over the course of the last decade. I do think Soros is right to say that, you should be cautious. China is still emerging markets, which means property rights matter. You have to watch volatility. It's different than developed markets. That hasn't changed. That said, though, we've seen several bear markets in China in the equity world amid a larger global bull market for stocks, and they tend to last 6 to 12 months. We're right in the middle of that at the moment, and I expect this to end. It could even be ending in real time as Chinese stocks are rallying over the course of the last week, but I expect that eventually they'll end over the course of the next months. And a lot of times they're based on reforms. Tough talk, but eventually backing off of things. And if you look at the comments over the weekend from Vice Premier Liu, he's talking about unwavering support for the companies and all of that sort of thing. But there's also over the last few weeks been things like support for the VIE structure, even indications that they're going to allow new offerings and IPOs and so forth. I think these regulations have been aimed at maximum social impact, which leads to maximum headline impact. But look for the bottom line impact for a lot of these companies. It's real for some, won't be as much for others. For example, in the education sector, the private education sector in China, I think those reforms are very real and they've taken a huge bite there, and you have to take that seriously. But in the gaming world, for example, I think that's a minor impairment that sees them go on to growth into the future.
And some of these companies are incredibly cheap now. Does this not represent an opportunity for investors who can stomach risk?
Well, I think of valuation as more like a sentiment indicator, because the fact is that on a 12-month forward-looking basis, valuation doesn't tell you very much about what stocks will do next. That's as true in the United States as it is in China, as it is anywhere else in the world. But it does tell you, people making comments like, China is uninvestable, shorting activities at all-time highs. I actually see that as bullish because otherwise fundamentals are okay. As I said before, the opportunities are going to be where you can see concerns that are ultimately overstated. If you take the gaming world in China, for example, these restrictions on those who are 16 years of age or younger to curtail the amount of gaming they can do, that seems very serious until you look at the bottom lines of some of these companies and realize that, in fact, it's a small portion of revenue that comes from such a group. So high headline impact, lesser, though, on the actual bottom line. I think that's bullish for the gaming industry in China.
And finally, Mike, let's look at the macro picture. How does that impact your outlook?
Well, China's always been a bit ahead of the curve ever since the start of COVID. They fell faster, they recovered faster, and now they're slowing faster. I expect that to be true across the entire world, not just China. But the fundamentals are still positive. The economy's slowing. PMIs have slowed, whether it be services or manufacturing, and credit activity has slowed quite a bit in the last several months in China as well. But I still think their 5% GDP target's going to be met, and this is in the overall context of a world that's still growing pretty rapidly, and China's going to participate in that. Earnings have been actually generally good over the course of the summer. What you want to watch for, I think, is margins. And I also think that, when you start to think about a pickup in China, look for that credit activity. It's often one of the best indicators.
That was Mike Hansen, Senior Vice President of Research at Fisher Investments. Before I go, here are some of the top stories in this space. China's exports unexpectedly grew at a faster pace in August thanks to strong global demand. Shipments rose 25.6% year-on-year, up from 19% in July. China's economy staged an impressive recovery from the pandemic, but the momentum has weakened recently due to outbreaks of the Delta variant, high raw materials prices, slowing factory activity, and government measures to cool the property market. Bonds and shares of China Evergrande Group deepened their rout on concerns about the developer's ability to restructure its debts. Moody's downgraded the ratings for China Evergrande on Tuesday, following a damaging downgrade from domestic agency China Chengxing last week. Regulators have warned that its $305 billion in liabilities could trigger financial contagion if not stabilised. And finally, Chinese dissident and artist Ai Weiwei has said Credit Suisse told him it was closing his foundation's bank account in Switzerland, citing his, quote, criminal record in China, despite having never been convicted of a crime. Ai is one of China's most high-profile artists and political activists, and now lives in Portugal. He said Credit Suisse wrote him in accordance with a new policy of closing all accounts with people who have criminal records, then called him to tell him they would be closing his foundation's account as soon as possible. Ai was detained by the Chinese government for 81 days, but was never formally charged. Credit Suisse declined to comment. And that is your roundup of the Chinese investment space. I'm Emma McCarthy, and this is Reuters.